All right. Thank you all for joining us this afternoon. I know it's been a long and active day for all of you, but we're delighted to have you with us. I'm also delighted to have an expert panel with me here today. My name is Paula Hunter. I'm Executive Director of the Mojaloop Foundation. Happy to be here in Singapore this week. We have three awesome panelists here today, including Supnendu Mohanty, Chief FinTech Officer from the Monetary Authority of Singapore. I imagine most of you know Sup. We also have Andrew McCormick, Center Head of the BIS Innovation Hub here in Singapore. And a last-minute substitution, Costa Peric, unfortunately, was not able to join us here. So Steve Haley has gamely agreed to step up and join us. He's Director of Market Development for the Mojaloop Foundation. So what I wanted to do today is really probe our panelists about financial inclusion and how we advance financial inclusion. It's a topic near and dear to my heart and the mission of our foundation, but I know all of these panelists have very strong opinions and advocacy for this topic. So let's jump right in. I'm going to start with you, Supnendu. How can technology and regulatory collaboration drive innovation? I mean, we're all here today, there's regulators, there's techies. How do we move this forward and actually scale up?
Okay, well, first thanks for having me, because it's the 7th year of Singapore FinTech Festival. This is the first panel in my own event. So thanks for having me to start with.
I'm honored.
So thanks for audience to stay back to here, at least in my own event. Well, it's a kind of moot point now. I think the only way you can scale and do that real impact on the inclusion side is technology. And from a regulatory standpoint, I think what you've done, we have enabled that process quite significantly, especially by the last 3-4 years. How long have you been here now?
2.5, let's say.
Yes. So with all the work we're doing on the public sector, on putting foundational infrastructure, and where he's staying in India, you look at all the public policy infrastructure, which is driving the base rail on which all this infrastructure being built, is a clear testimony of where the role of regulators, policymakers, and technologies coming together. India, Singapore are great example where public sector, private sector have all come together and truly built this foundational public rails. And that really has triggered this whole transformation on the application being built on top of that. So having that shift, that collaborative engagement has truly changed the model for especially the topic we're talking today.
Yeah. I'm going to ask you food for thought. I'm going to come back to you on this topic, but I want to talk about developing economies versus developed markets. Yes. I'm going to shift over to Andrew for a moment, but if you want to go with that.
I just want to make it very clear. I mean, one thing we should not, it's almost like elephant in the room, is that most of the payment infrastructure to start with are very expensive. And many developed countries are still struggling to put together a budget to support that infrastructure. So if you think about low-income and middle-income countries, it's just not possible to put that much money. So there's a need for an alternate open source model where it can allow a low-cost tech stack to be put into. Low-cost doesn't mean bad solution. It means much more efficient, collaborative code base, which allows those deployment for low and middle-income countries. But having said that, even developed countries struggle in putting budget and infrastructure for a truly interoperable payment system. So to me, it's quite clear the cost is so high.
Yeah, yeah.
I hope you guys are solving it in Mojalo.
Yes, we're trying. Open source is music to my ears. So Andrew, how can we scale from domestic solutions to regional solutions? And what are the opportunities, but also what are the challenges?
Yeah, so if you look at the development of domestic fast payments infrastructures, in over 60 countries now, there are real-time, 365, 24/7 systems that are live, and actually the access models to those systems are starting to evolve as well to include both banks and non-bank PSPs or payment service providers. And so those we see as fundamental building blocks in kind of a future state real-time payments network, if you will, as these services start to mature. Many countries around the world, obviously India is a world leader in UPI and IMPS and the development of digital payments there. But many other countries around the world are now kind of at that state of maturity where we can have a conversation around how to connect these building blocks in a way that has, quite frankly, never been done before until very recently. That's not a silver bullet for inclusion, but I think it's a necessary first step because, again, the regulatory perimeter around access to these systems is growing. There's a concept of same activity, same regulation that applies, and that ultimately allows both bank and non-bank PSPs to participate. And if we're successful in building a vision of interconnected fast payment systems, whether it's on a regional or even a pan-regional or eventually global scale, I think that will ultimately drive cost down, increase volume, and certainly I think when I think about financial inclusion from a remittance use case perspective, it has a tremendous amount of potential in that regard. But also I like to think about small and medium-sized businesses as well, because I think if you look at any economy, usually the vast majority of the economic activity is driven by millions and millions of small and medium-sized businesses, and they're they can be served better as well, both in a domestic but in a cross-border context. So we're very focused at the BIS Innovation Hub anyway, and also at other levels within the BIS and the G20 itself on taking tactical concerted efforts to make this vision come alive.
Talk a little bit more about banks and non-banks. It seems as if the traditional banks kind of have an unfair advantage. There's a lot of innovation here in this festival, and folks that want to get into this market and instant payments, and they're not banks. How do they fit? How do they jump in and get more engaged in Nexus, for example?
Well, I think the first thing is in any country, like in Singapore, for example, the Payment Services Act was a major step in that direction in allowing access to the fast payments infrastructure for non-bank players. And that means that those players are now subject to a certain amount of oversight and regulation, and that's a good thing. So Liquid Pay, for example, I know is a direct participant in the fast payments infrastructure here. In the UK, TransferWise, or now called Wise, is directly participant in faster payments in the UK. And those are important signals to allow for more competition and open competition for the banks. But it's also obviously important that they're well regulated and governed under some sort of regulatory framework in order for banks to be able to adhere to their compliance obligations and the trust that you have to build within a payments network, right? So hopefully that kind of answers your question.
But if I can quickly jump into this, if you look at a price point, when you are sending money through a banking rails, today, let's say to Thailand, before the prompt pay now connectivity, bank is to charge some 10, 15% for every $100. Wise will charge perhaps, I don't know, they're here, they'll dispute me, so $4 to $5 per $100. We had to put a mandate that if you're going to use this rail, it has to be $3. So it was almost a pricing structure which allowed the banks to come back to this game, because unless you have price points, because these consumers are very price sensitive, and despite all the technology, they need to have a cheaper, efficient, instant way to send money. So price point instant is a key part to this whole game. So that's what banks should at least focus on if they truly want to compete this market.
Right, and our experiences in Africa is, the banks aren't even touching the more remote sector, the unbanked, because there's not enough money in it.
Yes,
our argument is reduce the fees.
Yes.
Right.
Yeah, and you'll see the transaction volume rise, right?
Yeah, absolutely.
Yeah, okay, great. So, Steve, the concept of digital public goods is something that we hear a lot about, particularly in the developing countries, as a way to bring technology to market that's a lower cost of entry, but also a collaborative process, so folks can provide input into the roadmap of these solutions and influence what features and functions are provided in a digital public good. How do developing markets take advantage of this for financial inclusion?
So I think, Subnendu pretty much gave my answer, so what he said. But I think that, first of all, digital public goods for building digital public infrastructure, I think is, in a lot of places, just kind of accepted as the direction that we should be going. And it's not just payments, it's also identity, it's citizen registry. There's other digital public goods like MOSIP for identity, or OpenCRBS for citizen registry, or OpenIMS for health records. So I think this is definitely a direction that countries really should be thinking about if like Subnendu said, they want to bring down the cost of building this infrastructure. And it's not just bringing down the cost, it's, in my opinion, the right combination of local and global. I mean, you can have a system that is locally owned, locally controlled, locally maintained, where you're not dependent on a foreign vendor for all of the cost and political reasons why you might not want to be dependent on a foreign vendor for your national infrastructure, whether, again, payments or identity. But then you also have the global, which is, it doesn't make much sense to think about your national infrastructure if it doesn't connect with everybody else's national infrastructure. And so having an open source community around national infrastructure allows for both the national collaboration of all of your stakeholders, but then also for standardization to develop for cross-border. And so I think that combination where you can have both, like I said, your local stakeholders collaborating to put input into what your national payment system should look like, but then also countries collaborating in this community so that they're actually building similar things. And then lastly, for the future proof, I mean, it is the responsibility of the regulators to think about making sure that all citizens are going to be included in this. It's not the responsibility of the proprietary vendor that you've hired in 2022 to make sure that all of your citizens are going to be included in whatever the next use case that comes out in. And I think because that's where the responsibility is, that's where the ownership should be. And having an open source digital public infrastructure enables that ownership to be local. So I think that's where that collaboration can come from.
Thank you. There's still some skepticism about open source, though, and you know, I've been involved in open source communities and development for 20 years now, and probably every major bank in the world is running some form of open source. If you're ever running Linux, you're running open source. Why the hesitancy, so? Why the regulators and the central banks still hesitant about open source?
I think it's not hesitant on open source. I think the way we should think about this is that you can take the open source code base as the base code, but still country has to invest on a talent, on a tech company who will go to build the application which is suitable for the market. It's truly not open source in that sense. I think when you say open source, people believe that the country believes that you deploy in a country, anybody can come and hack it and make life miserable. I think there's a huge misconception there. He can explain that better. Is it really open source?
Mojaloop is open source. I think there's a lot of other digital.
But that's not what you deploy in a country.
Yeah, and you're right. I mean, well, it is. I think this is the nuance that I think is important for us to discuss. And I would say there is hesitancy, but there's also lack of clarity about the process of procuring an open source technology. How do you procure? I mean, how do you train up your local system integrators to be able to implement and maintain an open source product like Mojaloop and localize it?
Yes.
How do you procure the training of them? How do you procure that system integrator to do it? When it comes down to it, a central bank might say, we really would like this, but there are government processes that have to be reconfigured that might not be in the control of the central bank. And so that's why I like to talk about digital public infrastructure that goes beyond. It's not just payments that has to worry about this. The people responsible for identity have to worry about it. The people responsible for citizen registry have to worry about it. And so all of the ministries and all of the regulators should come together and help the government at a procurement level solve some of those, and procurement and legal level solve some of those challenges.
Well, I think from a government standpoint, I don't think we have an adverse view on the open source. It's just the process of getting the open source to dramatically reduce the cost structure, make it truly interoperable, and then build on that. I think that's the narrative should be, rather than a complete open source. You know, recently I saw an article that a lot of these cryptos are exposed to open source code, so they're getting hacked. So there's a constant narrative, open source is bad, exposed to hacker, so it's not a good for countries where payment is a national strategic infrastructure. You don't want to take that risk.
Right. So Andrew, your thoughts on open source?
Well, I used to actually be the CIO of a national payments operator, so I do have some insight into kind of the mindset, right? And it's not so much about cost, it's about security and paranoia around that aspect. So you do find that most countries, you know, have that debate internally, and some of them, like the UK or the US, would just decide to build their own system from scratch because they don't even trust a vendor solution, actually. They want to be fully in control of that entire development process, life cycle, and management of that code base. In other countries, certainly I've been involved in discussions with proprietary vendors asking them that to escrow their source code in case something goes badly. If I'm going to buy your system, I still want a copy of your source code.
Yeah.
Very reluctantly would they give it up, but those are sometimes terms and conditions that you do find in sort of national infrastructure negotiations. And then on the extreme case, could you or would you use an open source toolkit to implement that, payment system or CSD or whatever the infrastructure you're looking at? Certainly possible in the Western world where I kind of cut my teeth, it's a little harder to imagine. But that being said, it's a bit disingenuous because as soon as you look below at the VM or infrastructure layer, like you said,
Yes.
the vast majority of it is Linux-based and by definition open source. So, it's a bit of talking out of both sides of our mouth, I guess, in some sense. But the vast majority of the cost actually comes from the support and operations and the system integration. So the actual intellectual property that is the system is a portion of it, but that's like 20% maybe, and the 80% is all the other stuff that you need to actually build and operate.
Yeah. Well, and your point, that's where all the other cost comes in. And for folks in the audience that want to take advantage of open source, that's why Red Hat was bought for $3 billion by
Exactly.
IBM. So they made their money providing that maintenance and support
Yes.
to the customer base.
Exactly. Like any government procurement or corporate procurement is still going to need that, they would say, throat to choke. And in
Yeah.
that case, it was Red Hat many times over. And that business model is very viable. And I know I don't put words in your mouth from Mojib's perspective, but you're building an ecosystem of vendors around your solution for exactly that purpose, because they will be the front door for your solution, actually.
Right. So the question from the audience, right now we have the unique opportunity to set standards for international connectivity, I'm assuming with instant payment systems. If an upgrade is needed in the future, how can we get consensus on how to move forward with new revs?
I'll let this two gentlemen answer, but I have a answer which just came out of my head because we had a frustration of going through a process of connecting countries on payment system. And I figured out that it's not the standards which gave us a problem. It was the legal construct which gave us the nightmare, day and night. Till the last moment, we have to negotiate every possible remarkable legal definition I had never seen in my life when you have bilateral connectivity. And you don't realize that amount of pain you have to go through to get the two legal set of people from two countries to agree. So sometimes we underestimate when two countries connect the payment system, especially in multi-country connectivity, the legal barrier. The simple barriers are like liability coverage. Standards is the least part of my problem. We could figure out technologically how to interoperate, make some way to talk to each other. That was least of the problem. The real problem is legal, all the understanding of the liabilities coverage between two parties, and all the operational SLAs.
Yeah.
Just a nightmare. And we feel like today is the last day of the project. And I have the first-hand experience, unique experience to go through. Now the second one coming through now on this problem of international connectivity. So to me, standards is good. We can work on it, but somebody has to figure out the legal and the operational interoperability questions.
We might have to start a support group for people crazy enough to do these projects, I guess, pretty soon.
And yeah, people dig out some legal definition from somewhere and tell you, you know what, this is not going to work.
Yeah.
So let the standard question be answered by two gentlemen on both sides.
I'll just say, one of the reasons why international infrastructures move slowly. They're not fast-paced change machines. They're not super agile. And one of the reasons is exactly that question, right? It's you do need to coordinate the change management process across a wide number of actors, and it is something that it can be done. There's many institutions that do it. For example, Swift, has an annual change every November, and everyone knows it, and you have to plan for it, and that's how it works, and it's once a year. So it is possible, but it's not as agile as change that happens at the product level on top.
I just want to build on what Subnendu was saying is, why don't we expand our definition of standards beyond technical standards, API standards, ISO 20022 standards, to operational standards, to legal standards, to regulatory standards, and maybe not call them standards you have to abide by, but guidelines. And I think that's what we're trying to do at the foundation is, yes, we have this code base, but our community is coming up with all kinds of other things. We have training for hub operators on how to set up their hub operations. If you don't have to follow them. But if we do develop standards for hub operations and dispute management, I mean, one stupid little thing, then a cross-border payment, a dispute, will be much easier if both hub operators on both sides are using similar dispute management systems.
Absolutely. I mean, the dispute is another point. I just had days and days and days of discussion how to settle a dispute. So it's a very, sorry I'm venting frustration here, but if anybody from the legal community here, do take it up and build the standards on the legal side.
And please contribute it to the Mojib community.
Contribute to the foundation. And I have a deep respect for Swift now. It is a miracle of a time to actually exist today. Think about the complexity of legal and operational differences every country can carry.
Yeah.
So finally, I have a deep respect for Swift after so many years.
I mean,
So speaking of Swift, how do you envision the transition from current systems like Swift to more open systems?
I just told the exactly opposite. I have a deep respect for Swift because somehow miraculously they have gone through the legal system so efficiently, despite handling how many countries Swift handles? 50, 60, 70 countries. I don't know how big is their network. Open systems. Well, I think by design we are building open system. Nexus promises us many open, right? Why don't you talk about Nexus, your open system of future?
yeah, sure. So I mean, like, look, the Nexus concept is interconnecting retail fast payment systems, right? And if you think about that, that's low value payments, maybe up to as high as $100,000, let's say, in some cases, which would support small business use cases and international trade or regional trade. But you know, that's a vision that we're working on and actively promoting. And I think one of the other questions was focused on ASEAN, and we are working very much with this community in Southeast Asia to try to take that vision potentially into, you know, a real operating construct. But it's going to take some time. If you think about Swift, you know, like you have to understand that network is spanning globally. There's 10,000 endpoints on it, and it's also optimized for high-value transactions, which is super important. If you need to move millions and millions or even $1 billion around the world, you can do that safely, securely on that, and that's not going to go away anytime soon, nor should it, right? There's been a lot of discussion around central bank digital currencies and wholesale networks, and there's a lot of interesting work happening in that space, but it doesn't necessarily preclude an operator like Swift from providing services in that space, and I would expect, you know, they've published papers in that space. And I'm not here to defend them, but I think everyone will evolve and change, and building a global network is a super hard thing to do, and there's value in having that.
Thank you.
Sorry, Paula, if I can, I think we should start thinking about system based on the segment of consumer. Because there is a certain segment of consumer or low income, low value transfer may need a different system for high value, large income segment of population. Because different system can have a different trade-off. And you should think about, because if you start to build a common system for all kind of remittance, low value, large value, you may end up in a bad system. So you must have to think about this segmentation based on the remittance value.
Yeah.
Good point. Thank you. So we have a question from a university organization. How do you envision the transition? Oops, that's the wrong question. We lost it. Lost the university question.
So I think we're going to take the question after that.
Well, the question was, you know, what is the role of universities in this discussion? Innovation, research, training, thoughts?
I'd like to jump in on one of the countries that we're working on in Rwanda, actually, in building their national payment infrastructure program. They've actually involved all the top universities to make sure that the next generation of technologists and payment experts are going to be trained up in this process and all the technologies they need to support the national payments infrastructure. And I think that it should go beyond that, to Sapnendu's point. I mean, legal, operational, all the other business should also be involved in this. So I think there is a role in actually ensuring that from the training perspective, to make sure that the next generation of citizens can actually help contribute to their national infrastructure.
Yeah, thank you. Did you want to?
No, I think that he has covered it.
So I'm going to ask you to put on your future predictions hat. For some reason, my question's not displaying here, but how long before we see cross-border instant payments becoming mainstream in Asia? If you were to bet on it today.
Well, I can start saying that we have built the connectivity with Thailand. We are shortly going live with India and Malaysia. But one thing for sure, bilateral connectivity is a pain. It is too much of operating, or too much of human resources get consumed in the process. It's not necessarily the most efficient system. I think in the long run, we believe a multilateral connectivity system like Nexus will play a big part. But I also want to give a little disruptive, a naughty answer to your question. You know, the panel before us was this stablecoin fellows were there. I have a feeling that if it's a well-regulated stablecoin, it can become a disruptive, low-value transfer cross-border process because it's a tokenized, low-value money. It doesn't need a account-to-account debit credit process. And if it's well-regulated and the right currency stablecoin, it can disrupt low-value transfer on long run. While the mid-size, large-value transfer will still run on an account-based system, and we defer it to Nexus to make it happen.
So this low-value coin is going to supplant the need for CBDCs, or
No,
is it CBDCs?
I'm not sure. CBDC will be more efficient engine behind a Nexus to solve the settlement problem, the reconciliation problem, which will reduce the $3 to $1 cost. But stablecoin in particular seems to be interesting because it can create a competitive, low-value, efficient transfer system.
I mean, the question is how long before we see cross-border instant payments becoming mainstream, and regardless of how we get there, I do think that it's possible, certainly, to see certainly the bilateral connections grow in volume. We know, for example, the Pay Now link has seen 3 times growth in the past year or so, and so that's a very positive signal. I think we're going to certainly work towards exploring multilateral models, and I think the importance of mainstream is that reachability in a payment network is critical, right? People don't use it if you can't kind of conveniently send money anywhere, and so building that kind of reachability and breadth of the network is critical to achieving mainstream, and I do think that there's a lot of work underway now to start to make that happen. And it will take at least a few more years, though, to start to really kind of have those work programs kind of really take root, work with all of the stakeholders, all the banks and PSPs, and at least 3 years.
So Steve, your experiences in Africa, does Africa have the chance to leapfrog based on the fact that they have us legacy systems to disrupt?
I mean, I hope so. I think, well, they have their own legacy systems with the success of mobile money, which has created a lot of different silos, which is a different problem to overcome. But I do think that, yeah, we have the ability because they are, most African countries are definitely further behind in developing IPS systems. So hopefully they'll be able to learn from some of the lessons that are happening in ASEAN and the challenges of overcoming those. But I think to tie that into the last question, Andrew's probably right. I mean, 3 or 4 years, 5 years, but I actually don't think it's going to be. I think it's going to be mainstreamed before that. I think you guys have 2 years until the wallets, whether the telco-led mobile wallets in Africa or the FinTech wallets in Asia, basically say, no, we're going to do it directly. And so the ability, I think we do have a very short window in which the governments can take control and actually make, first of all, inclusive instant payment systems that do reach those wallets and reach those customers and interoperate with each other. I think the wallets are going to get there faster. 2 years is what I would say.
Well, they're already here, actually.
Yeah, I would say the stablecoin will be more faster than that if they get it right. So yeah, but I would strongly encourage, especially open source code base, to go to the low-income countries and help them to leapfrog that. Ultimately, you need a faster payment system to start with. So I think that also will perhaps push some of this agenda ahead.
Yeah. Well, there's no question that there's strategic vision in these countries to do it.
Yes.
In many cases, it's a resource issue, not just money. Not just how to invest in the infrastructure, but as Steve mentioned, building up the capacity, the talent, the local talent to do those deployments, because you can't just be flying people in at Singapore rates to deploy solutions in developing markets. So that's probably one of the things that we see as a hindrance to success is getting the people on the ground, trained up and able to take care of their own citizens and solutions rather than depending on external parties.
Yes, agree.
Okay, we've got about 20 seconds. Any last thoughts? I'll let you close out. It's your conference.
No, I will like to thank you to bring this topic because it's very important for all of us to know there are many countries who can't afford national payment infrastructure. The work Mojalub is doing to bring it together to this market, we want to thank you for that. And I hope a lot of countries look at this as a way to leapfrog some of the cost of putting payment systems. So let's hope for the best and let the competition begin. And right here at Singapore FinTech Festival, have a good time. And next 2 days, a lot of exciting content. Do come back. Good food, complain, tweet me.
Thank you to my panelists, and thank you to the audience for the excellent questions.
Thank you.